What's going on, traders? Welcome back to my YouTube channel. I changed the camera angle a little bit just to bring you closer to me so that we can, you know, enjoy this moment. Today, I'm going to be talking about free entry techniques you could have used today to take potential trades on pound USD. Now, if you've been following what's happening in the market, you would have seen that there's been a really strong push to the upside. And to be honest with you, if you didn't get involved, don't be worried. There'll always be more opportunities. But the aim of today's video is to make sure that I can help you identify how you can get into trading opportunities with 3 different entry techniques. First, I'm going to share an entry technique on the 15-minute time frame. Then I'll share an entry technique on the 5-minute time frame. And then the final technique I will share with you on the 1-minute time frame. All I ask from you is to hit that subscribe button if you're new to the channel, and welcome. Turn on notifications for when I post videos next. And of course, hit that like button for me, just to share the love. And that's all I ask from you. So without further ado, let's get into the video. So here we are, traders. Pound USD, you can see here. Now I'm starting with the 4H time frame because, as most of you probably know, in my humble opinion, I think the 4H time frame is the #1 time frame for intraday traders. For most of us, we're looking to take advantage of daily moves. And I think with the 4H time frame, if we're trading for the best part of the London session to the New York close, we have 4 opportunities. Actually, that's wrong. We have 3 opportunities to take advantage of the actual physical momentum and behavior that is illustrated with the candles in the 4H time frame, meaning you have the 6 till 10, you have the 10 till 2, and then you have the 2 till 6. Okay, so now let's gather some information before we move on to the entry techniques here. First things first, what can we identify? We have to build a story. That's the #1 rule. Now, yesterday could have been strong brick wall to the upside, failing to break highs, breaking below structure, looking for sells. Absolutely fine. Yesterday, we took the sells, is what it is. But remember, every day you must come back to your charts and you need to remove the drawings and start again. What is today's story? Well, we can see price broke the structural low. In anticipation of the structural low, what we anticipate price to do is come back to a retest level in the market, and then we want to see price making a new lower low. This was the sells we took yesterday after this close, and we anticipate the new lower low. Now, what can we see here? Well, we can identify that price failed to make the new low. So we're building the initial part of the story. Now, during the Asian session, or let's say during the New York session, we can see that price, yes, exactly that New York session into the close, into the Asian session, we can see price failed to break the structural lows. Volume depleted, we don't see much momentum. However, moving into the London session, what we do start to see here is we start to identify the momentum shift again. We have this bullish close at 6 o'clock. So this is a 6 to 10 candle. And what we're anticipating here is a continuation of that behavior. Now, we're not going to go down to pound USD, but you will see from, pound JPY, but you'll see from pound JPY that the pound was very strong this morning. So now we've built the second part of the story. The first part is price is failing to break structure. Then during the New York session yesterday into the close, into the Asian session, there was a lack of volume. Then we have a huge volume period where we have this strong bullish candle pushing to the upside. So that's the middle part of the story. We also have confluence from pound JPY that there's pound strength in the market. We're just solidifying what we need here. So then once we have this information, we have a fail to break and a double bottom, which in theory, double bottom means a buying opportunity. We have a behavioral pattern that failed to make a new low. So there's a depletion in bearish sentiment. We have a lack in volume continuing to the downside, which means buyers are more likely to be stepping into the market. And then we have confirmation of that at the London Open, which was today, 26th of October, 2021. What do we anticipate next? Well, the final part of the story is a continuation of that bullish momentum. Where do we expect price to come back to? Bare minimum, a structural high. Exactly what's happened. Now, that's all well and good. We've built the beginning, we've built the middle, but how do we end this scenario, the process? Well, this is where we come in today with the 3 entry techniques. The first one we're going to be focusing on is on the 15-minute time frame. Let's head over there. So traders, we're here now on the 15-minute time frame for the first entry technique. Now, remember, we've built our story. We know in the back of our minds that we are looking for buys only. Now, there's a few ways to enter the markets, and there's going to be different strategies and techniques out there, and all of them probably work. But I'll be honest with you, in my humble opinion, if you incorporate the initial part of your story, which is identify what price is doing with the behavior, and then the simple rule of price must break a high and close or break a low and close to look for continuation in line with the high time frame analysis, you're set. There is nothing more you need. Okay. Now, it takes practice, of course, but I guess that's why you're watching these videos. Anyway, point is this. We know our story from the higher time frame. We're looking at a range here. That's clear. But we're not just looking at a range. We're looking at a behavior within the range based on higher time frame analysis. Remember, higher time frame analysis, we get a big tick. Now we're here. So prices failed to break this for a long period of time. We have a break back in. That's a sign that in theory, price is still stuck in a range. Now we have a structural low where price is failing to make a new low and a new higher low. If we have a structural low and higher low, what do we anticipate? A new higher high. Based on the high time frame analysis, what are we looking for? We're looking for price to eventually make a new higher high. Can we enter the market immediately? Probably not. What we're looking for the market to do now is give us signals, give us signs that price can continue pushing bullish. First sign here is a 15-minute close. So be patient, traders. What do we see? A really nice wick rejection. What does this resemble? Remember, there's three candle formations you want to be focusing on. Wick rejections, indecisions, and momentum candles. This one here, of course, is a wick rejection candle. We're looking for price to show signs that it's failing to break below the high that it just broke, in line with the new behavior, making a higher low and a new high. What do we classify this as? Well, more often than not, a retest if you scale down. But we're not scaling down. We're using the 15-minute. Look here. We have another sign. We have price attempting to push bearish again, failing and also closing bullish. Now, we not only have the higher time frame analysis in our favor and pound strength in our favor and price failing to break lows in our favor, we also have price failing to break lows on the 15-minute. We have a higher high, higher low formation. We have a new high, multiple wick rejections at the retest level in the market. This is just a sure sign based on what we've gathered that we can be looking for trades. How can you be taking trades? Well, you can be entering immediately now, but I'm more often than not like to take buy stops just above the structure, placing a stop loss below. So we'll go for a 9-pip stop loss and we'll go for just a 1 to 2 in this scenario. We've gathered the beginning of our story and the process as to why we want to enter this trade with the confluences added to the middle part of our story, and using the 15-minute time frame, this is the final part of our story. And there you have it. How could you have entered pound USD today using the 15-minute time frame along with high time frame analysis, creating a plan and following through with that plan? Well, this is exactly how you could have done it. Let's move on to the 5-minute entry. Okay, traders. So here we're now on the 5-minute time frame. Remember, we're still following the same consensus and process that we gathered from the 4H time frame, which was the structure, the failing to break structural lows, the lack in bearish volume, and the new signs of bullish momentum along with pound strength using pound JPY as a confluence. Here we have more data to work with as opposed to the 15-minute, because we not only have price failing to break the structural lows, we have price stepping up, making new higher highs, double bottoms, which indicate to us potential buying patterns. And then look here, we have a really nice trend to the upside. Price hasn't broken this brick wall. And now what's happened? We've taken out our previous structural high. Where has this come from? Well, it was the last high in this formation. And obviously using the higher time frames, 15-minute, this was a structural high. So now we have this break above. What are we starting to see here? Well, firstly, we identify the bullish trend along with the higher time frame, remember, which we get a tick with the break above the structure. And we have an area in the market where price is not breaking structural lows. What does this mean for us? Well, it just simply means that price is showing that the bulls are still holding on to these market conditions, and there's a much higher chance price can continue to push bullish. What are we looking for here? Well, we've got enough information, but we're looking for either wick rejections, indecisions, or bullish candles. We have a wick rejection. Can we enter here? We probably can. in the likelihood that we don't want to be wrong, we'd probably want to wait for price to do what? Show strong signs of bullish momentum first. That would then indicate to us that it's falling in line with the high time frame analysis that we've done in the beginning, and that there's a much high chance price can continue pushing bullish. So look here, we have the break above. Now, can we enter this trade? This is a 5-minute entry. This is a bullish candle. This is where we place our stop loss. And in this scenario, we will just simply go for a 1 to 2. And that's how you could have entered GU today using this entry technique, using the 5-minute time frame. Let's move to the final example using the 1-minute time frame. So traders, we're now on our final and third example. And now we're going to use the 1-minute time frame. So keep in the back of your mind, we have high time frame analysis, which would give a tick. We had price failing to break the structural lows. We had a lack in volume pushed to the downside, indicating bulls are taking back over. Double bottom pattern, which indicates to us potential buys. And we had strong volume candle to the upside, which is indicating pound strength using GJ as a confluence. Now, the 1-minute time frame, what do we have? We have a clear trend to the upside. We also have here a really nice break above structure. What pattern are we looking for? Well, for most of you, you know, we're looking for a retest of this structure. We're looking for price to come into this area and show strong signs that it's failing to break the structural lows. Now, what I want to say to you traders is if price comes into these levels here, and just for argument's sake, just silence the critics, let's say we did take this trade, okay? Using a 3-pip stop loss, we pop that below. Oh, and guess what happens? We lose a trade. It just is what it is. It's part of trading. I'm only doing this to silence the critics because they're going to be like, well, why didn't you take that in the live market? You're always picking the best trading idea. Well, no. Okay, we take a 1R loss in this scenario. But the point I want to make for those that are really listening, we want price to come into these levels deep. That is it. How many times have you entered a trade where price has not come into a key level, then you find it stops you out and goes in your direction? Keep that in the back of your mind as a number one rule, that price must come into a key level deep enough. And I mean deep enough. Okay. Once it comes in deep enough, then it gives you an opportunity to have a much safer stop loss and less of a chance to be stopped out and then see the market go in your direction. So now what we're looking for, what are we looking for? We're just looking for a strong bullish candle, wick rejections, indecision candles. It really doesn't matter, but let's just say for argument's sake, again, we're looking for price to just show signs that the momentum is kicked in. Now, what do we have? We have price showing signs of a strong trend, a break above a key level, a really nice retest, and now a momentum shift. Can we enter this trade? Well, using the higher time frame analysis on how we could have gone into GU today based on the 1-minute time frame, I think this warrants an execution. And let's see what happens. There you go. We hit take profit. So traders, that is how you can enter 3 different ways using 3 different time frames, by focusing on the 4H time frame, understanding the structure, the behavior, and the momentum, and then scaling down to your intraday time frames to get the entries you want. Hope you enjoyed this video, and if you did, smash that like button for me. That's all I ask of you. Show your appreciation, share the love, subscribe if you're new, turn on notifications, and until next time, continue to trust the process.